Good morning, everyone. This is Mike Minter, Chief Investment Officer for Financial Synergies. This is your market in minutes. So we're looking back on September 11th through the 15th. This is Monday morning, and I'm going to be doing these on a weekly basis just to accompany the Week in Perspectives blog that I send out. So some people prefer to get it in video, and so we're going to try to accommodate that. I may not be able to do this every single week, but I'm going to do my best to get a video done per week. So hope you enjoy that. So and I'll try to make these as quick as possible, as I know you don't want to spend 30 minutes on these things. So let's jump right into it. By the way, this will be not only in the blog article as an accompany YouTube video, but also live on our YouTube channel, and you can digest it however you would like. Okay, so let's jump right into it here. So last week on Wall Street, so all the major indices are listed here pretty much. We got your Dow Jones, your S&P 500, NASDAQ, which is a little tech heavy, obviously, and then Russell 2000, which is your small cap stocks. So pretty boring week, to be honest. Not much going on. It's been a pretty sideways market in general in September, but last week was pretty ho-hum. Mixed with the Dow Jones up just a smidge. We have the S&P down just a smidge, and NASDAQ down a little bit more, and a Russell 2000, down just a smidge. So like I said, it just not a whole lot going on last week in terms of market movement, and we'll talk a little bit more about that here. So stocks did struggle for direction. It just kind of trading around a flat line, no catalyst, to go in either direction strongly. Thursday was something to feel a little bit happy about. The European Central Bank signaling its rate hike campaign is probably coming to a close, so that's bullish. That's great. Hoping to see that here too. Maybe not this year necessarily, but hoping to see the end of the rate hiking campaign soon here too. Stronger than forecast retail sales and modest increase in core producer prices. So again, a good telltale sign that the economy continues to improve. And then, unfortunately, on Friday is what really sent things kind of down is sentiment reversed with news of a drop in consumer confidence. Never a good thing, but not overly concerned about it. Just, it's one of those things that ebbs and flows. But troubling news in the semiconductor space and a labor strike at the nation's auto manufacturers. So if you've been tuned into the financial media at all, you've seen the strikes and the amount of turmoil that's causing. So hopefully we can come to some resolution on that soon. So that's causing some disruption in the economy. All right, so moving on. So if we just step back a little bit, let's take a look at year to date. So this is very encouraging. I don't think anybody can argue with the fact that this has been a phenomenal year for stocks just across the board, especially for a little bit more broad-based indexes like the S&P, obviously up double digits. The Dow is 30 stocks. It's still a good barometer, but it's going to take a little bit more of a value tilt. And the S&P is, I think, these days is better representative of the broader economy. NASDAQ, of course, is just crushing it. That's very tech heavy. So I think we all know that tech has had a phenomenal year, and so that's indicative of the NASDAQ doing really well. And then small caps having a decent year as well, up about 5%. So switching gears now to inflation. So this was kind of a bigger story last week. So surging gas prices, that kind of drove August inflation rate to a very high monthly rate, the highest this year. So not the end of the world. Nobody wants to pay more at the pump, but that did increase, and so it was a little bit of a drag on the market. Year over year CPI, Consumer Price Index, posted a 3.7 increase, up from July's 3.2. And core inflation, now this was encouraging. This was actually rising 4.3, And that's down from July's reading of 4.7. So that's actually a very good sign. So we had some good and bad mixed in here, but overall just kind of stalled the market a little bit. So producer prices also came in higher than expected, rising 0.7 in August above the estimate of 0.4. These are not big numbers, but when you annualize them out, they're more impactful. So, but again, just pretty ho-hum market in general last week. Pretty boring to watch, but let's switch gears now and see what's on deck for this week. So this is what we got coming down the pipe. Key economic data here. So we're going to have some reports coming out starting Tuesday on housing starts. Wednesday, the FOMC announcement. That is the Federal Open Market Committee. So that's basically the Fed, and they're going to meet and determine, well, they talk about a lot, but determine rate hikes, if any. The overwhelming consensus right now is that there will be no rate hike Wednesday. If that were to not be the case, that would be, I think, a pretty big shock to the market. I don't think that's going to happen, but that's where we are. So that's one to watch for sure. Thursday, jobless claims, existing home sales, an index of leading economic indicators. Friday, purchasing managers index, PMI composite. And then we switch over to companies reporting earnings here. So Tuesday we have not a big week by any stretch for earnings, but Tuesday we have AutoZone. Wednesday, FedEx Corporation and General Mills, and Thursday, Darden Restaurants. So that rounds out the week. So pretty normal week, not a ton going on, but we'll see how it all shakes out, and then we will report back next Monday on the week. So hope that wraps up the market for you in minutes. And here is all of our contact information should you need to get a hold of us. If you are a client, of course, anytime, any day, give us a call. If you just want to talk about your financial planning needs or investing needs, please give us a call. We'd love to talk to you and help you out in any way that we can. Okay, that's it. I'm going to now leave it with fun disclosures and close this out. But I will see you guys next week. Have a good one.